Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Right now we see silver at $16.88. It is down due to stock markets setting record highs again and the partial agreement coming between the US and China with the trade negotiations. So right now these are things that are going to definitely be pushing prices lower, but there is still some stability. And this article from Seeking Alpha talks about how it's just a further correction in silver would be a scaled down buying opportunity. It's definitely just an advantage to lower your dollar per cost average, buy some cheap silver for Cyber Monday, and to stack and build a foundation, which is key 101 investing. So before we start, I want to mention there is a link to Golden Statement to purchase your precious metals for great prices, a very diverse selection, and from a respectable dealer, always in the description. So let's jump into this article. The link will also be in the description. So a further correction in silver would be a scale down buying opportunity. Silver and gold ran out of upside steam in early September. Silver did not accomplish what its yellow cousin did. Lower highs and lower lows could lead to a deeper correction. A volatile year on the horizon in 2020 and the USLV and DSLV to turbocharge trading opportunities. So when digital photography changed the fundamental equation for silver, many analysts believe that the price of the precious metal would never recover. However, demand for silver in computers, cell phones, solar panels, and many other industrial applications rose to more than compensate for the loss from photography. Silver spent most of its time below $6 per ounce between 1989 to 2003. For a lot of that period, the price was below $5 and ventured below the $4 level. Silver reached a low of $3.50 per ounce in 1991. At the turn of this century, the price was between $4 and $5. However, all the concerns over industrial demand quickly disappeared from 2006 to 2011 when silver rallied to a high of $49.82 an ounce, just 54 cents below the all-time high in 1980. Each year, investment demand and herd behavior determined the path of least resistance of the price of the precious metal. Meanwhile, silver corrected back down to $13.63 in late 2015. The price of silver has not traded below that level since 2009 or under $10 per ounce since 2008. The last time silver was below $6 was way back in 2004. After reaching a high of just $19.50 in early September, the price was back below $17 at the end of last week. There are lots of reasons why we could see increased price variance in gold and silver markets in 2020. The most direct route for a risk position in silver is via futures and options on the COMEX division of the CME or in the physical market for bars and coins. For those looking for leverage tools to turbocharge and the percentage price action in the silver market on the upside and downside, the Velocity shares 3x long silver ETN USLV or its bearish counterpart DSLV provide an alternative. So, very interesting stuff, a little history on the prices of silver, and a lot of people do forget that just not even 10 years ago, silver was $50. I mean, you have to remember that, and you have to also incorporate that in your strategy because it happened extremely fast, but that also means that it crashed extremely fast. So right now, we need something to slowly, gradually start brewing up, and this is going to allow the price to hold when it does get to those levels. So silver and gold ran out of its upside steam in early September. So gold reached a high of $1,566 on September 4th on the active month of December's futures contract. The price of the yellow metal corrected to its most recent low of $1,446 on November 12th, a decline of 7.6%. Silver reached the $19.75 range on December futures contract, and more volatile precious metals fell to $16.61 on November 12th, a drop of 15%, more than double the move to the downside in gold percentage basis. So, silver is definitely more volatile than gold. Now, this is a very long article, so I'm going to highlight the main points. So it's talking about what silver did not accomplish that gold did. The gold market broke out to the upside in June when the price rose to the critical technical resistance of July 2016's high of $1,377 an ounce. Gold blew through that level like a hot knife through butter and reached the $1,560 level. Meanwhile, silver rose to a high of $19.75 on the December futures contract and $19.54 on the continuous futures contract over the same period. July 2019 post-Brexit high in silver market continues to stand as the level of long-term technical resistance is on the upside. So it's interesting because usually when gold makes a move, silver usually follows suit shortly after with around the same levels, with the same ratios. But the gold to silver ratio at 95 to 1 a couple months ago is now down to 85 to 1, but it still is extremely high. So when are these levels going to normalize back down to that 60 to 1 level? What's it going to take? Lower highs and lower lows could lead to a deeper correction. The monthly silver chart shows the precious metal put in a lower high. We could see further corrective price action in silver futures markets over the coming weeks. The short-term technical support level in the silver markets at a recent $16.61 low. Below there, the 2019 low in the technical support is at $14.24 an ounce. Meanwhile, the long-term technical picture in the silver market continues to suggest that the path of least resistance for the price of silver remains higher. So that's interesting because the volatile year is 2020. All of these factors that caused the breakout to the upside in the gold market and rally in silver remain intact going into 2020. The U.S. global interest rates have declined and are not heading higher anytime soon. While the markets are hopeful that the U.S. and China will reach a Phase 1 agreement on trade, it does not seem like a deal is on the horizon in 2019. And moreover, many issues continue to divide the negotiators. Iran continues to be a thorn in the side in U.S. Saudi Arabia and as U.S. sanctions choke Iranian economy. At the same time, there's no end in sight when it comes to the proxy wars between Saudis and Iranians. Another deadline for Brexit has come and gone. The next movable line in the sand for the divorce between UK and European Union is now at the end of January. The 2020 presidential election in the U.S. will be a highly contentious affair. The incumbent president is likely to limp into the contest after Congress impeaches him and the Senate acquits the President Trump. And the uncertainty of the future U.S. policy, with Democrats embracing a progressive agenda, could cause periods of fear and uncertainty in markets across all asset classes. So not only is it going to be, or it could affect just precious metals, but it could affect everything. It could affect real estate, it could affect stocks, it could affect cryptocurrency, options markets. And this is interesting because it shows, he even mentions that things are not even looking like they might get better. They're not, and it's going to take several years for this stuff to even start to rebuild itself. So gold and silver flourish, they capitalize off of the economy or what's happening or whether it's getting worse. And people are more speculative now than ever. There's a lot of emotional attachment, a lot of tensions are running high, and this is definitely going to affect the price of precious metals. So 2020 is going to be a very, very, very interesting year. I do not see things getting better anytime soon, especially for precious metals. And this is simply because nothing is actually coming to terms. There's no agreements. They did a partial negotiation between U.S. and China today, and this was still, we don't even know what's really going on behind the scenes. It could be much worse or much better, but they're feeding the media, the public, you and I, the people that want this information, whatever they can to sway the masses, and it could be very wishy-washy. It could be a lot of gray area and extremely hard to really understand what's really going on behind the scenes. So anyways, the USLV and the DSLV to turbocharge trading opportunities. So for the most direct route for risk position in silver markets via the physical coins and bars available from dealers around the world, the COMEX silver futures market offers a delivery mechanism making a smooth convergence with physical prices. Those market participants looking for a leverage and action in the silver market consider the velocity shares, the ETN, or the bearish counterpart DSLV. The two products are only appropriate for short-term trading positions on the long or short side of the markets as time decay in the price of their leverage. The USLV has net assets of $342 million and trades on average 429,301 shares each day. The DSLV's net's 25 million, much smaller, and 470,000, so 472,000 shares. Changes hands on the average session. Both products charge a 1.65% expense ratio. So it's showing the opportunity, the potential that the ETF side of things have if you are into silver for trading. Silver is much more volatile. There's a lot of opportunity when you're trading, investing in silver compared to gold. They are still both bearish, especially if you're looking at something like cryptocurrency that can jump to $20,000 in a couple months and then shoot back down to $10,000 within even a shorter amount of time. But it really does show really where silver's potential lies and the opportunity. And this isn't even talking about the fundamental value that it has and the industrial demand rising with the supply diminishing or abandoning. And there's a lot of stuff that we haven't even covered in this video that really also is in silver's favor. So I definitely think that silver is highly opportunistic with a lot of potential and a lot of advantage, especially in the year 2020. So I hope you guys enjoyed this video. Like I said, the link will be in the description if you want to check it out yourself. Hope you guys enjoyed it. If you did, make sure to smash that like button. Make sure you subscribe because I do post daily videos every single day. If you missed the video I posted earlier today talking about silver's price, I highly recommend it. It's not looking good, but it's definitely an opportunity to buy. Thank you guys for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.